Good afternoon, everyone. My name is Dominique Velcher. Welcome to the Harvard University Employees Credit Union Student Loan Repayment and Refinancing. Joining me today are my colleagues, Migdalia Gomez, AVP of Community Engagement, and Sarah Scruggs, Community Engagement Specialist. We are so happy to be here with you, all of you today. Now, before I get started, I just wanted to talk to you about some household items. We're going to be reducing any background noises, so everyone is muted. And so if you have any background noise, we won't be able to hear it. And also, please use the question feature. So if you have any questions at any point, you can just ask us in that way. And also, this presentation is being recorded. So in case you miss any portions of it, or if you wanted to replay any portions of it again and in your own time, you can also do so. And of course, at the end, we'll have a post-survey workshop. So you can tell us how we did, different things we can do to improve for future webinars. Before we get started, I wanted to ask everybody a question. Who is happy that all of our student loans, especially the federal ones, they're on pause? Like both of my hands are up. I know you can't see me. We're all happy for this break, right? But sadly, we have to talk about paying back our student loans. But before we get started, I want to talk to you about the difference of the credit union. So the credit union, what we try to do is we try to give you better value. We are a non-for-profit. We basically put all of our members first. We try to get you all the better rates. We shop around, we look for different things in terms of comparison with like the big banks, and see how can we have our members save money. We also on loans get lower fees, and of course get free services and different perks. We also want to make sure that you guys get the best service possible from coming into our branches and making sure that we have this personal relationship with you, making sure you feel comfortable, you feel at home. If you have a question, you can reach out to us, not just in person, online, picking up the phone and giving us a call and saying, I have this question, I have this problem, and if you can help me. We make sure that we have the best business model out there just to make our members feel that they are part of it because it is your credit union as well. And we may make sure that we are better for the community. We interact with different organizations who are all members of our credit union. I am going to now pass it on over to Sarah. Like I said earlier, we don't want to talk about student loans. We don't want to repay them back. We want to try because its interest rates are killers. So Sarah's going to take it and kick it off and talk about steps to paying back our student loans. Sarah?
Thanks, Dominique, and thank you everybody for being here today. It's so good to have you here, and I'm glad to be joining you today to talk a little bit more about this. We are in a good position right now to talk about student loans. I think as we are kind of getting back into the swing of a lot of normal things in our lives, hopefully we're also getting back into the swing of thinking about how we can best strategize to pay back a lot of our student loans. And so today we'll be going over understanding what type of loans we hold, any repayment options that there may be, whether that is a certain type of plan or maybe something other than that, doing our research on federal forgiveness and discharge options, as well as talking about refinancing options right at the very end there. But something I do want to ask all of you, just so that I can get a better hold on what everyone is here to learn about, in the questions panel, if you could just let me know what type of loans you have. Do you have a private loan or a federal loan that you're looking to learn more about today? So if you could just let me know in the chat or the questions feature. Perfect. Thank you so much for letting me know that. This just helps me to better tailor the content for today. So if you could just let me know again whether you have a private student loan you're looking to learn more about or a federal student loan that you're looking to learn more about. Thank you so much. Okay, we're getting a couple answers. Looks like most folks are here to learn more about federal student loan repayment, which I love because we do have a lot of really good information and hopefully some additional helpful information on something called public service loan forgiveness that all folks at Boston Children's should know about. So let's get started. Step one, we have to understand the type of loan that we hold, not just if it's federal or private, or maybe you're sitting there and wondering, Sarah, you just said federal and private, and I don't know what either of those things mean, and I don't know which one I hold. And so this is a perfect first step for you. There really are three different types. We've got our federal. These are going to be our direct subsidized and unsubsidized loans, as well as any plus loans that you may have. You may have a plus loan if you had a student, a child in school and applied for a parent plus loan. So maybe you don't have any loans for your own education, but you may hold some for your dependent's education. State loans, these are going to vary widely between states. Some states offer loans, some don't at all. And so you'll see differences in between these loans, pretty wide range. But I encourage you, if you do hold state loans, to look for more information to that specific state. And then private student loans. These are offered by credit unions, banks, universities and schools, and other private companies. Sally Mae is one that you'll hear a lot. Private student loans are ones that are not on hold right now. These are ones that you are probably still continuing to pay at their agreed upon interest rate. So it is important that you're able to discern which type you do have, because each of them have a little bit of something different, and they have different outlooks for whether it's the best choice to refinance or to take a different strategy and maybe talk about other repayment options. So that's something to take into consideration when you're looking at which types you do have. And if maybe you don't know exactly which type of student loan you hold, it is extremely beneficial to go ahead and figure that out right after our webinar today. Take 10 minutes after our webinar today and figure out which types you do hold. And one of the great ways to do this is through looking at your credit report. So that is one of the best ways to figure out what type of loans I actually hold, and what could be best for me to repay moving forward. If you have federal student loans, they are obviously on pause for right now, and they have been for 2 years now. And you can see that right now the plan is to go back after August, um, and you would be paying them back at their normal rate, but interest has not been accruing during these past 2 years. So hopefully that has given you a little reprieve from budgeting that. But one thing that I really recommend is going ahead in the next couple of months and starting to budget for that repayment period again. If you have not been paying for them these past couple of years, go ahead and start budgeting for that, because we don't want to wait around until September begins for us to actually start thinking about that repayment again, because we don't want it to be this huge change and shift in our budget. We want to already have that in mind. And maybe it's next month, I'm going to budget half of what my student loan repayment would be, and the month after that, I'm going to budget 2 months or a full month. So that way you're scaling up towards paying off that full monthly balance, and it's not a 0 to 100 really quick for you. So if anything else happens on student loans, if they make a new announcement, like they have probably 6 or 7 times now, about when federal student loans will go back into repayment, know that you can go to studentaid.gov. And I'm going to mention studentaid.gov throughout our presentation today because it is such a vital website for folks to know about and to go to. Studentaid.gov has information about your specific loans if you hold federal student loans, as well as general information about loans. So let's talk about the two types. Well, there's more than a couple of types of federal student loans, but these are the two most common. You'll see here that there's federal direct subsidized and unsubsidized. Both of them are direct loans, but this name has changed over time. Previously, they were known as Stafford loans. So you might see Stafford if you went to school some time ago, or if you went to school a little bit sooner, you'll see direct loans. They are the same type of loan. We're talking about the same thing. There's no credit check when the student borrows this money because Normally, when you borrow a federal direct or unsubsidized or subsidized or unsubsidized loan, you're an undergraduate or you are in graduate school. So you may not have that robust credit history like you would if you were going to get a private student loan. Subsidized loans are only available to undergraduates. So if you just have federal student loans for your graduate education, you would only see unsubsidized loans. You can defer these loans while you're enrolled in school at least half time. You can defer payment on them, excuse me. But with unsubsidized loans, they are going to be accruing interest. Something to note is that they will accrue interest. And then there is a 6-month grace period once you graduate from school to begin paying those back. Their hope here is that within 6 months, you'll be able to secure a job that will help you to pay these loans off. Your rates are based on when you borrowed the loan. Right now, all rates are 0%. We're not paying any interest on our loans. We're not paying any monthly payment on these federal loans. But when we do begin paying them again, rates are based on when you borrowed the loan. Normally, folks have 4 different loans if you went to undergraduate for all 4 years. And so that means that they have 4 different interest rates that you're working with. That can be quite confusing, right? It seems like, okay, well, I went to one college, I should have one payment. But a lot of times you'll actually have multiple payments because you have different interest rates for each of your loans. So it's good to note, when did I take out this loan and what was the interest rate at that time? It doesn't matter what the interest rate is right now. It matters when you took it out. There's also plus and graduate plus loans. You can only have up to a certain amount of federal subsidized or unsubsidized loans. And so the federal government then created the plus program where you can get additional funds either through the parent as an undergraduate or through the graduate student once you've gone into your master's degree or doctorate, what may have you. So when you're looking at these two things, there are pretty large differences. With the plus loan for undergraduates, so this is a parent plus, you may hear that talked about often, the parent plus loan. There is no deferment period, there's no grace period, but you can request a deferment until your student has graduated from school. But the default here is that they won't be deferred. You'll be paying on them from the day that you take them out. And that interest rate is varying depending on when it was dispersed. But the lender for both of these is the Department of Education. That's why they are federal. The Graduate Plus loan is based on the student's credit, right? So these do come with a credit check. That is important to note. The plus loans do come with a credit check, and it is based on that credit whether you're eligible for it or not. And so with this Graduate Plus loan, they're a little bit of a different rules. They understand that the graduate is in school at this time, so a payment period begins 6 months after graduation. And then there's private student loans. A lot of people in our country today hold private student loans as well as federal student loans. And so we want to make clear that this is an extremely important topic to talk about. But unfortunately, I can't tell you everything about your private student loan because I don't know what a bank in California has to say about their private student loan versus what we do here at the credit union. Those are very different things. So all of the terms completely vary based on the lender. And if you are looking for a private student loan, shopping around is always a good idea. So many of the terms will vary, and it is so important that you get all of the details of these things because when you begin paying them off, all of those terms become extremely important. You can borrow these through bank, credit union, private companies. I mean, I can't even count how many places you could get a private student loan, but there are some potential benefits to private student loans as well. Maybe you've held yours for a certain amount of time and made a certain number of payments. There could be the opportunity to have a cosigner release on that, as well as reduction with auto pay, so an interest rate reduction with auto pay. What this means is that the bank or the credit union or the person that you're paying knows that I will be getting my money every single month because it is auto paid. And so I will lower the interest rate for them. So that's important to note too, is maybe you're not getting the full benefits of your private student loan. So maybe you have questions about, are there other discounts? I wouldn't hesitate to ask, even if you are in a repayment period. It's a good thing to just ask questions about. You have to know the details of all of your loans, and that's so important, right? So knowing the amounts, the rates, and the terms for each of your loans. The best place to do that if you do have federal student loans, like I said, studentaid.gov. That is one of my favorite websites today. You'll hear me say it probably upwards of 10 more times throughout our presentation, but studentaid.gov can give you these details for it. And then if you do hold private student loans, free credit report is where you can go. So annualcreditreport.com, excuse me. Annualcreditreport.com is where you can go. And you can get a free copy of your credit report. And this is where it will tell you, your interest rate, what is your monthly payment, who should you be making these payments to. This is where you go if you want to look about those private student loans. And just recently, they stopped doing a free weekly report. To be honest with you, nothing will change from week to week. About a cadence of checking your credit report once every 3 months is something that we found to be most beneficial for you. So check that annualcreditreport.com. This is a safe website to do that at. And if you have any questions about credit reports, we do have a webinar on credit on our YouTube channel that's been recorded in the past. So I highly recommend checking that out if you do have questions. So we now know about our loans, who we should be paying them to, and what are our terms. Those are all extremely important to set us up for success as we begin to strategize repaying them. So let's talk more about repayment. So what are some options that we have? With federal repayment, I'm going to say this again quickly. With private student loans, I do not know a lot of your options because you have to talk specifically to your lender. They know the repayment options, and they can help you with that. Unfortunately, I can't give you that information directly. But federal repayment are more standardized. So let's talk about the basic repayment plans. When you take out a loan and you've graduated from college, your 6 months grace period is over, you're going to fall into the standard repayment plan automatically. And that is a 10-year standard plan. You pay the same amount every year, every month for 10 years, and you have paid off your student loans. This can be a pretty large burden for some students. You may see that, I'm making a pretty low amount my first job out of college, but my income grows. And so there are other repayment plans that are called income-driven repayment plans. These plans you have to request. You have to speak with your servicer about getting yourself put on one of these income-driven repayment plans. These income-based repayment plans are more along the lines of, okay, you start out in a lower paying job and hopefully your income will grow over time and you can make larger payments as time goes on. And I think this is a pretty, this makes sense, right? A lot of things in our life we start off paying a little for and then it gets more and more. And so normally income driven plans will last anywhere from 20 to 25 years. Depends on exactly which plan you've chosen and which is best with you and your servicer. So it is important to note that you have to request to be on an income-driven plan. And if you are looking for public service loan forgiveness, you have to be on an income-driven plan, a qualifying income-driven plan. And Migdalia will speak to that a little more, but the reason for that is because in a standard plan, you see over there, a standard plan, it would only take you 10 years to pay off all of your loans. And public service loan forgiveness doesn't kick in until you've made 120 qualifying payments. And so you would have paid off your whole loan by the time you would qualify for public service loan forgiveness. And so that is why income-driven plans are the only plans that qualify you for public service loan forgiveness. Those are a couple of plan opportunities to go through, but now talking about deferment and forbearance. Right now, we are in a forbearance period. Okay, so with federal loans, let me make that clear. With federal loans, we are in a forbearance period. That just means that they've gone ahead and said, okay, nobody's making payments, you don't have to make payments, and the interest rate is at 0. So we're not accruing interest right now, which is great. This normally doesn't happen, right? Normally we are paying back. We are always in that place of those plans and making those payments. But right now we're in a period of deferment or forbearance, excuse me. You can also possibly ask about federal deferment. This allows you to pause payments under certain conditions. And there are some conditions that we'll go over on the next slide, but just know that if you don't qualify for deferment, there is possibly the option to go into forbearance. Again, obviously right now you're in forbearance, you don't need to request it, you're just automatically put into forbearance. But something to note, reach out and ask if you are having trouble making your payments. I can't stress this enough. Don't just sit there and not make payments. Give your servicer a call, whether that's a private lender or a federal lender. Reach out and say, can you work with me? How can we make this work? Because any payment is better than no payment at all without any context, right? And I just can't recommend that enough, reaching out to your servicer and letting them know the situation that you may be in. What happens if you miss payments? And this is why I tell you any payment is better than no payment, because it can affect future borrowing. Let's say that you've taken some time off in between undergraduate and graduate school, and you make no payments after undergraduate, but you're trying to get a loan for your graduate program. But unfortunately, you're not able to borrow because they see that you haven't paid back the money you already borrowed. So it is really important that you continue to make those payments and speak with someone if you're having trouble making those payments. It negatively impacts your credit score, which impacts us in our daily lives. It may impact the type of credit card and the interest rate that you receive with the credit card. It could impact the type of auto loan you qualify for. Credit impacts our lives. Higher bills. If your interest continues to accrue, you're going to continue paying more money, right? And so you're always going to pay more money. And then on top of that, they normally will put a fee on your account because of late payment, late or missed payment. So unfortunately, it just hurts, kicks you while you're down, right? And so this is why we stress giving someone a call and saying, how can we work together on this? Because more than likely, you can find some way to move forward. And then government intervention, that's normally the last step, and you'll see wage garnishes and things of that nature. But we're going to be in a positive mindset. None of us are going to reach government intervention, and we will be the ones reaching out proactively and talking about any questions that we do have with our servicer. So I am going to pass it on over to Migdalia to talk a little bit more about forgiveness and discharge options for federal loans.
Thank you, Sarah. And again, thank you everyone for joining today. We are putting some different links in the chat, so please take a look at those. And this is a topic that, I mean, we've been hearing about it on the news. I feel like every day there's something new that comes out. There was just an email that I saw a couple right before jumping on the webinar about more potential. Will student loans be forgiven? Will they not? So we are with you in the sense that we have the same questions. We're going to definitely provide updates, but know that doesn't seem like the government knows what they're going to do with forgiveness as of yet, at least with additional potential forgiveness. And as a result, we don't quite have the answers because they don't quite have the answer, but we will let you know what we know, and we will give you some really good resources. So just to start off, I'm going to start off with the ones that aren't as popular. And the reason that these aren't as popular or as frequent, if you will, for forgiveness and discharge. These are if if your school closes. So this was also in the news a couple months ago. There were certain schools that closed, were no longer open. And essentially what happens is if you had federal student loans and they were from a school that is now closed, those loans can be forgiven, or essentially should be forgiven. But there were some people that didn't have that process happen automatically. So fortunately, folks intervene and now those have been discharged. There's also teacher loan forgiveness, and this is very specific to those that are teachers. Given, that you are working at Boston Children's, may not qualify for that unless maybe you had a different career before joining Children's, or maybe somebody else in your family may be eligible or may know of this. And then there are others such as total and permanent disability discharge. Federal student loans are discharged if we do pass. And there are a couple of other reasons, but again, they're not as common. What most people are interested in is public service loan forgiveness, and especially for you working at Boston Children's because you are eligible, or your employer most is eligible, assuming that you're a full-time qualified employee. But what exactly is public service loan forgiveness, or PSLF for short? Now, public service loan forgiveness, what this is, it's a program through the federal government that is fairly newish. It was founded about a little bit like 12 years ago or so. So it's fairly new, but essentially what it is, it's a program to encourage individuals to work in the public sector. And this could be working for an employer that is a not-for-profit, such as hospitals, education, universities, certain government positions. So there are many positions that if you work full-time as defined by your employer. And that's important because for some employers, full-time might be 40 hours, for some it may be 36 or 37. So don't focus too much on the hours necessarily, but the definition of what full-time is per your employer. But if you were to work full-time for this employer and you were making monthly payments that were on time, and that means that you could probably be a day or two late, not that we encourage that, but overall you're making your payments on time, and you are in a qualifying repayment plan, and Sarah spoke to this earlier. So a qualifying repayment plan typically is an income-driven plan. The reason for that is that if you are in the standard repayment, that would be 120 payments. 120 payments, if I made my 120 payment, I don't have anything left. My loan, I have zero balance on my loan, which will be wonderful, but that also means I wouldn't have anything available that could be canceled. There are situations now that some changes have been temporarily made. And what this means is that if you were maybe on a different type of repayment plan, or now during the 0% interest rate that the government has had for the past 2 years, those payments of zero qualified. So it could be that someone that was under a standard repayment option is actually now eligible. They may have some funds that could be forgiven. Now, what I would recommend is really going to be to go directly to the student aid website. And there's a tool that you can utilize, which is a public service loan tool. And you'll be able to get a lot more information on your specific situation because everyone's situation is different. So you'll see on the next slide a little bit more about where you can get this information. I'll also put the link in the chat so that you have it. But this is where I would recommend going. It is straight to the government's website. You're going to get the full information from them. You can put in your information and see what options are available specifically to you. And you could see if potentially the different waiver and the limited waiver opportunity. So it isn't, it's still open right now. The waiver that they have is through October 31st of 2022. So this means that maybe in the past you did not qualify for public service loan forgiveness. Maybe you looked at it and you said, you know what, I tried, it didn't work. Because of this new waiver, you could potentially qualify for it now and receive credit or have payments count that didn't count previously. So remember, you have as long as you make that 120 on-time payment in a qualifying repayment plan, the rest of the amount would be forgiven, assuming that you were working full-time for a qualified employer. One of the reasons that this is such a benefit, and a lot of folks want it, I mean, it's a great benefit if you qualify, is that the money that is forgiven is not taxed. So let's say that I have $30,000 that's forgiven. Let's say that I owe $35,000, and I'm making up numbers here, so it may not exactly match, but let's say I owe $35,000, and this year I've made $5,000 in payment, and that last payment I made was my 120th payment. That means that the remaining 30,000 would be forgiven, and I would not have to pay taxes on it. There are some other loan forgiveness programs through the federal government that 30,000 would be counted as taxable income. So when I file my taxes for 2023, I would have to show that I had $30,000 forgiven. And let's say I made $50,000 in 2022. It's going to appear as if I made 80,000, or I should say it's going to appear as taxable income of 80,000. But with public service loan forgiveness, that does not apply. So it's literally, it sort of vanishes, if you will. No taxes are being paid on it, which is really beautiful thing to not have to pay taxes on loans that are forgiven. If you're not quite sure, best thing you could do is go through the PSLF help tool. It's a really wonderful resource. And then if you have a situation and you've reached out and you're not quite sure where to go, I'm also going to put in another website that is freestudentloanadvice.org. And this is a wonderful organization. They help, and it is free. There's no charge. They do this. They're a not-for-profit, and they're very qualified individuals that have worked in the industry for years. And they can provide additional support if you go onto the FSA website, the Federal Student Aid website, are not quite sure, don't know where else to go. That is another wonderful resource. So what if you don't qualify for public service loan forgiveness? Or what if you're just not quite sure? Well, rates, so potentially, as of right now, they are going to go back to not zero after August, but we'll see. But let's say that it's now September, the rates repayment has gone back into place for federal loan. Maybe you're not going to be working at a nonprofit for the foreseeable future. Maybe you have a balance, let's say it's $5,000, $10,000, $2,000, whatever balance you think is manageable, or a balance that you would rather pay off than wait for forgiveness for those federal student loans. Or let's say that you have private student loans and are thinking, should I refinance? We'll talk a little bit about when it may make sense to do that. So first, just want to make sure we're all on the same page as to what is refinancing. I don't know about you, but everyone has a little bit of different history when it comes to personal finance, and not everyone was taught personal finance. I know I wasn't in school until I did it as a profession. So I just want to make sure we all know what refinancing is. In short, and especially for the purpose of our conversation, refinancing is taking debt that you owe with company A and bringing it to company B. Why would we do that? Well, let's say that my loan is 10% with company A, but company B can offer me a 5% rate. I may decide to take out a loan with company B. Company B pays off company A. Now that loan is gone, I no longer have it. And now I owe company B the balance of my loan at a lower rate. The benefit for that? The lower interest rate. Typically, that is the main reason people will refinance. A lot of folks are refinancing in the last year and a half because of mortgage rates being so low. Personal loans rates were really low. The market has shifted. The rates have started going up, and it will continue. And it appears that they will be continuing to increase in the next couple of months. So people may not be as likely to be refinancing as at this point. Another reason that people may refinance, sometimes it's not even about the rate, it could be about the time. So let's say that I have a student loan or any loan, and it has a 5-year repayment term. That means that my payments are going to be probably higher than if I had a 7-year repayment term. So if I extend my repayment term, typically my monthly payment will be lower, assuming the same interest rate. The reason I may want to do that is to have more cash flow month to month. There are times that it can be stressful. It can be overwhelming on our budgets to have a significant amount of our budget go towards debt repayment, especially if we are at the beginning or at a point in our career that we know we're going to probably earn more in the upcoming years. We may want to take on a longer term and extend and refinance for that reason. With refinancing, there's typically, especially in Massachusetts, no application fee, no prepayment penalties, which means you can pay off the loan sooner if you're able to. And that's a wonderful idea for those that may have the tighter cash flow today, but in the next couple of years may have more flexibility in their budget and they could accelerate repayment. And accelerating repayment is ultimately beneficial because it helps you reduce how much interest you're paying overall with that specific loan. I do want to point out that refinancing is different than federal consolidation. So federal consolidation is when you take your federal student loans, and for most of us, we probably have or had more than one federal student loan, because if you attended for multiple years, you probably had a loan for each academic year. And then you may have had a subsidized and or an unsubsidized. So as a first year, I may have had 2 loans through the federal government. If I went on to grad school, I may have more loans through grad school. So if you log on to Federal Student Aid website or studentaid.gov and you see multiple loans, you may think about consolidating. And what that means is I would take all of those federal loans and make them into one federal loan. With consolidation, it's only federal. So I cannot take a private student loan, a loan that is not held by the federal student government, and include it in that federal consolidation loan. Federal is just federal. Refinancing, you can refinance private and federal. It's any combination that you wish. With federal consolidation, though, some things that I would consider is if you are considering public service loan forgiveness and have already made a substantial amount of payments that qualify, once you consolidate, it's a new loan, meaning that any of those payments that are qualifying payments would no longer be eligible for public service loan forgiveness. I would check to see with the waiver if maybe there's an exception that you would qualify for, but for the most part, if you're thinking about public service loan forgiveness, it is not recommended that you consolidate, at least not until you speak to someone that can review your specific situation to see if it would make sense. Other things to consider before refinancing: the interest rate. When you are refinancing, that's usually the biggest piece. You want to get the lowest interest rate because it will save you the most money over time. Now, there are going to be situations that it may make sense to hold off refinancing to work on your credit score so that you can get an even more favorable rate. There are times, though, that may not make sense. For example, if I could refinance at 5% today, but if maybe I bring up my credit score couple of points and could get 4%, I may focus on bringing up my credit score for the next 2 months or so that I could qualify for that lower rate. Every lender is a little bit different. Some lenders, I know for us, you're more than welcome to, you can check our website, you can give us a call, we can give you an idea of what rate you could qualify for. And there are some lenders that may not disclose that until you apply. But just keep in mind, if you believe there are things you could do to improve your credit score, I would try to do that before applying, especially if there could be quick fixes. And all of you, I'll talk about it and show you in an upcoming slide, but you all have access to free credit counseling. So that would be something I would recommend before refinancing, just to make sure you're at the top of your credit game and can get the best interest rate available to you. Now, other things to consider, and probably one of the most important one, especially if you're considering refinancing federal student loans, are the benefits. Once you take once you refinance or once you consolidate, it is a new loan. That means that any other benefits that were tied to that loan no longer exist. It's a new loan. It's as if you moved. It's as if you lived in Boston and decided to go to Worcester. You are in a different city. You have different house, different apartment. It's a different situation. You cannot go back to the old apartment or the old home that you liked and use the dishwasher. Just not a benefit anymore. You don't live there. You don't own that place. You're not renting it. Same thing with the federal student loans. Once you refinance and take the federal student loans outside of the Department of Ed, any of the benefits that Sarah discussed earlier, the different repayment options, the 0% interest rate that is occurring right now, none of those would be available to you anymore. And that's the main reason that we are not recommending refinancing right now. If you have a federal student loan, as we know, they don't quite know what is happening. As of right now, potentially repayment will end or will restart for September, end of August. And if that's the case, if you refinance right now with a private lender, you're going to go into repayment right away. Or maybe there's all this talk about will they not be forgiven? If there is any forgiven that does occur, once you refinance, you would not be eligible. So you do want to consider keeping those loans with the federal government until you know more about what will happen and whether it makes sense for you to pursue public service loan forgiveness or any of the other federal benefits. And then, as I said a moment ago, if you refinance, you go into repayment right away. So usually within 30 days, you go into repayment. So if I have federal student loans and I'm at 0% right now, and I decide to refinance, so take that federal loan, bring it to company A, who's a private company, no longer the Department of Ed, I would have to pay that loan around June or July at this point, sort of depending when I finalize that loan application. But I would have to pay before I would have to pay if I would have stayed with the federal student loan. There are times that that may make sense. If I know that I'm not going to qualify for public service loan forgiveness, I know I'm going to go work for a for-profit corporation, and I know that my loan balance, it's $5,000. I just want to be done with it this year. I'm just going to accelerate the payment. It may make sense for me to refinance. But even then, I would probably still wait until after the federal rates are no longer 0%. But the point here is that your situation may be different, and it's important to know what are your longer term goals? What are you trying to accomplish in the long run? What effect does this have on your finances, on your mental well-being? There are times that forgiveness may not work for everyone, and there are times that forgiveness may be the best option for your situation. And that's why we recommend going onto the studentaid.gov website, going to do more research using the public service loan forgiveness tool, and reaching out to resources such as freestudentloanadvice.org, where you can get more specific information on your situation. We also have GreenPath Financial Wellness, and these are the accredited credit counselors that I discussed earlier. They can go through your credit report. It will not impact your credit score negatively. They're pulling your credit report for educational purposes. And anytime you or a partner such as GreenPath does that, it does not bring down your credit score. What they'll do is they'll review your credit report. They can also review your student loans. If you want an outside organization that is a nonprofit to do that, they will do that for you for free. And I know when we hear free, it can be little, I always tell everyone nothing is for free. And that is true. This is free for you, but we paid for it. That's why it's free. And I like to say that because I don't want you to think, what's the catch? And the catch is there isn't any. We pay the bill so that you don't have to, because we as a non-for-profit, we believe in the benefit of personal finance education and counseling. We know that if you are doing better financially, that is better for those around you and your community, and that is what we want. We want all of our community members to do well financially. I'm a numbers person at the end of the day, and here are some numbers to just show sort of everything we've been talking about. What does it look like? So this is an example of a $40,000 loan, 8.5% interest rate. Your monthly payment is $552. Your loan term, or the months in repayment that you have remaining, would be 103 months, and the total interest paid, assuming this balance and these these monthly payments, would be 16,314. Now, the total interest paid is going to be very important when you're comparing repayment strategies, because that's the cost of the loan. That is what you're going to utilize to see what potential savings you may have. Now, if we refinance, you'll be able to see that that $40,000 loan could decrease to 5.5. That means my monthly payment would be lower. And typically what happens is when you refinance, they're not going to give you an 8.6 term or 8.6 year loan term. They're going to say, okay, you have 103 months to pay it off. It's usually a 10-year, a 5-year, a 15, sometimes 7, but it's usually a little bit more. It's not a 8 point something. So if you refinance at a 5.5 and do a 10-year repayment, that would mean that the remaining loan balance would cost you $12,093. That is the cost of that loan. But just because you take a 10-year loan does not mean you have to pay it in 10 years. You can always pay it off sooner. And this is good advice outside of student loans as well. If you are comfortable paying $552 a month, you can continue to pay that and save a substantial amount instead of paying it over 10 years. That additional 3.6 years that you're saving is going to save you about $4,000. And for me, I know for me, one of the drivers with paying off debt is being done with it earlier. That is something that motivates me more than the financial piece. Do not get me wrong, I always want to save money, but something about saving time just makes me more hopeful. It's like, oh, if I can pay this off in 2 years or be done with it 2 years sooner, that means I have 2 years that I can use that money for another financial goal, maybe for a vacation, maybe purchasing a home, a car, whatever it is that would bring you joy and whatever it is that you want, where you want your money to go. So doing something like this is another example of just finding what works best for you. Now, there are going to be situations that hopefully as time progresses, your cash flow, you have a little bit more cash flow month to month. So if you are able to increase your monthly payment, this just shows, even increasing the payment by $23, it can save you about half a year and about $500. So I would recommend using calculators. We used our calculators, hbcu.org/calculators. There are many calculators out there. Do some calculations, know what the amount that you owe, the interest rate, and your monthly payment, the loan term, and then just compare. See what will that interest paid go, how can you reduce that interest paid by making a couple of adjustments? And know that even if it is, going from a additional $50 that you're paying on your loans could be a significant amount, especially if you go from one month to the other. So maybe break that up. So maybe every couple months, increase your monthly payment by $10 or $20. That may seem very small, but especially at the beginning of the loan when you have a higher balance, it's important to try to pay as much as you can, because when you make a payment for your student loans or any other loan, the payment is first applied towards the interest that has accumulated and then towards the principal. That is why at first, when we have a loan that just goes into repayment, it could be discouraging to see how much you pay and how little the principal goes down. So if you are able to pay a little bit more, it will help you get that interest down so that more of the payment can go towards the principal. We have on our website some resources, including a student loan repayment flyer, and you can get this and other flyers at hbcu.org/thrive. That's THRIVE, Thrive. And from there, you can also get information about free financial counseling through GreenPath and access other resources that we have. I'm going to turn it over now to Wendy, who is here from Boston Children's, and she could tell you a lot more of different resources that are available. And while she does that, I'm also going to put in the links for a quick survey just to help us continue to improve these workshops for you and other at Boston Children's. And Wendy, I'll turn it over to you.
Thank you, Midal, and thank you, ladies, for that wonderful presentation. I learned a lot of new things myself as well. And good afternoon, everyone. I am Wendy Mateo Arias from the Workforce Development Program in Human Resources, and I am here just to welcome you. Thank you for joining this session. I hope that you were able to learn a lot of new things, or maybe just remember a few things that we forgot, since maybe you might be going through paying some of the student loans or for your children's. So Harvard University Employee Credit Union is one of our new partners. We have been partners for a few months now, and they are part of our financial well-being program here at Children's. We are looking forward to just increasing the benefits and also the services that we provide to our employees, not just to improve our work area, but also touching bases in the financial, the well-being, the health areas of our employees and families. So I invite you to visit the benefits page um, at Boston Children's to see a little bit more of the services that we have there available. We have discounts for a lot of different things. And I also welcome you to visit our Harvard University Employees Credit Union to take a look at the past recording of informational sessions that we have. We always provide a different topic that touches a lot of different areas of our financial lives. So thank you for joining. And thank you again, ladies, for the wonderful presentation.
Thank you, Wendy. And we will be emailing everyone a copy of the presentation. And as Wendy said, you can access additional presentations that we've given in the past by going onto our YouTube channel. I have put the link and I'll put that in again so that you have that for your reference. And some of the sessions that we have are also available in Spanish on our YouTube channel. So if you or someone else that is in your household or a family or a friend is interested, we do have some of these in Spanish. And I just put the link on of our YouTube channel and specifically the Boston Children's playlist in the chat. And I know it's a lot that we went through, and I don't know about you, but I'm one of those people, just give me some next steps. Tell me what I should do now, because there was a lot going on. So that's what we try to do. We try to make it as simple for everyone. And one of the things that we recommend is go through and complete your own student loan repayment chart. As Sarah said, that could be one thing you could do. Take a couple of minutes. What kind of loans do you have? Federal, private, just list them out. It's not necessarily a fun activity to write down, oh, look how much debt I owe. We completely understand that is not a highlight. However, it is going to empower you, and it's going to maybe hopefully motivate a little bit more to get to find out more and see how you can pay it off sooner and how you can save more money in the long run. So complete your repayment chart, list the debt that you have, calculate how much it's going to cost you, and then do some research. Go onto that public service loan forgiveness website through the student aid, the Department of Ed website, and see if you would qualify for public service loan forgiveness. See if it's something that is of interest to you, and then calculate those numbers, run those numbers. You don't have to use a financial calculator, although if that brings you joy, go for it. But you can just use calculators that we have on our website or find any others online that can help you determine how much can you save by refinancing. I also want to quickly just always have to mention, everything we said is general overview of information. As I have mentioned, we don't know your specific situation. If Sarah and I or Dominique were fortune tellers and knew everyone's specific information, we would be doing so much great things in the world and trying to help everyone. But unfortunately, we do not have that skill set. We are not fortune tellers. We don't know everyone's specific situation. So we do recommend to reach out to folks like GreenPath to get that free student loan advice and other organizations, student aid website that can give you your specific information. We are here for you. As a not-for-profit financial institution, our members are always first, and as Boston Children's employees, you are all eligible to join our community. And even if you do not, you can still enjoy all of these resources that we have when it comes to personal finance education. We have a blog, we have these webinars, we have many great events that happen throughout the year. And know that if you do become a member, or if you are, we thank you for being a member, and you will be a member for life, even if you are no longer working at Boston Children's. We hope everyone has a wonderful day. And if you have any questions, know that you can always contact us. Thank you everyone for your time.